let's make one and check it out. So let's go and enter a more simple invoice and one that doesn't have inventory, and then we'll deal with inventory. So let's say this is going to be customer one, just generic customer one. We're going to say, okay, now I'd enter an email if I'm going to email it to them, but I'm just going to have generic customer. I'd have to enter their billing address if I was going to send it to them, which means when I set up the customer, I would need more than just customer, but a lot of other information. Noting that if you're in the type of industry that you are actually sending out invoices, it's possible that you are more likely to have repeat customers, such as a bookkeeping or law firm or landscaping, in which case you probably want more information from the customer, their telephone number, their email, their address, if you can get it. Give them your mailing address, even personal information, so you can talk to and communicate with the customer cordially, right? Whereas if you're at a cash register or if you're on a Shopify store or something like that, then you don't really do that. It's kind of counterintuitive because a lot of times people want to build their network and it becomes this massively important thing to think about how many people you're connecting with just as a game almost. I have connections with all these different people, but in sometimes some businesses that's actually counterproductive because you're only if you're selling like some toy or something on a Shopify store, you're not trying to build a long-term relationship with a particular customer. You're trying to satisfy them with that one particular transaction to the point that they're happy with the service and possibly talk to other people about that one particular transaction. You're not contacting them and talking to them about how their kids are doing and this and all that kind of stuff, right? Whereas if you're a CPA firm or even a hairstylist or doing nails, or you're a law firm or a landscaper, then you are going to be dealing with people on a personal basis, and the networking on a personal side can become, part of your whole life and your whole, accounting system. So in any case, so then we're going to say the terms, we'll keep it at net 30. I'm going to put it in there. We'll keep it at the 1/6. So the due date is going to be 30 days because it's net 30. I'm not going to deal with the tags at this point. I'm going to make a new item. I'm just going to call it service item 1. So I'm going to set up an item, and I'm going to set it up as we go. Not an inventory this time, not a non-inventory, but a service item. So that means there's no inventory involved. So it might be hourly services would go under that category, or oil changes and that kind of thing. Let's put the classic $100, and the income account is automatically going to a service account for income. So we'll say, all right, we'll keep it there at the service account. And okay, let's close it up. Let's say that we did 2 of those, whatever services. Now, is it subject to tax? I'm going to say it's not subject to tax, which I should have been more careful on setting up the item to say it is not subject to tax, because I want that to populate automatically. So, but I'll uncheck it at this point. And then down below, we have all these items. Now, if I had multiple service items, I can add multiple lines, of course. But what's this going to do from a journal entry standpoint? It's going to increase accounts receivable by 200. It's going to increase the revenue account, which we're driven to the service item, by 200. And it's going to impact the subledger for breaking out who owes us money by customer, in this case, customer 1. Let's look at that just from an Excel standpoint, just so we can see it in a transparent format. A simple invoice, what's it going to do? Accounts receivable is going to go up, and that's going to be a debit if you want to think about debits and credits. The other side is going to go to some kind of income account or revenue account on the income statement. We put it in here for 200. So accounts receivable is going to go up with a debit of 200, and income is going to go up. I'm going to put a credit. Negative here doesn't mean negative income. It means a credit. So we have a positive net income because it's income minus expenses of 200 on the income statement. This part is the income statement. And then up top, we have an asset of $200. It's not cash, but hopefully it's close to cash, because hopefully our clients aren't deadbeats and they'll pay us. And then we'll get the cash, which means we'll decrease the accounts receivable. So that means that this accounts receivable account is an accrual account, because we're recording revenue before we get the cash. We have to do that because I need the accounts receivable on the books because that allows me to track the accounts receivable to see who has not paid me and then go out and collect on it, which means I'm going to need a subledger for this accounts receivable by customer so that I can track the payments. Let's check that out over here. So if I record this, I can say save and close and say, ¿Qué pasó? What happened to the financial statements? Let's go to the balance sheet, run it to refresh it. And then we'll go down into the AR for 2025 this time. And there it is. So there's our invoice. So we increased by 200. Let's go into that particular invoice. And there it is, customer and so on, $200 went up. Looks good. Let's close it out. Let's go back to the prior. Let's go to the profit and loss, the P&L, the income statement, run it to refresh it. And they put it into the service income. Notice there's more income accounts than normal here because it's a job cost system. So we put it in, here it is down here, services. So there's the 200. So we increased the income statement by the 200. Now this balance sheet account has income or assets in it that I need to collect on. So I could look at that from a subledger perspective. So if I go to the first tab and we go down to our reports, then I could look for by category who owes you. Normally we'd look at an aging, but let's just look at the classic subledger, which would be a customer balance detail. I'm going to right click on this one, open in a new tab, and here we have it, closing up the ham boogie and running it. So now we've got the accounts receivable not broken out by date, as is the general ledger or transaction detail report when we drill down on an account from the balance sheet or income statement, but this time broken out by customer. So we can see here's customer one, there's the 200. If I add up all the customers that owe us money, 5,481.52 should tie out to what's on the balance sheet. 5,481.52. Notice that in QuickBooks, those two things will almost always tie out, and you have to work pretty hard to mess that up because QuickBooks will force us every time we post something to accounts receivable to add a client or customer so that the subledger will always tie out. Other software, more advanced software, or customizable software won't do that because there are some times that you don't want that to be the case, and if that happens, if those two things are not tied out, something's wrong. That's a problem. Now, normally, you don't actually go into this report all the time because if you're in the accounting department, you're going to be going internally into the widgets on intern. So if I go to the left, in other words, I would be in the sales center, and I could check the invoices in multiple places. I could go to the sales, all sales, and I could sort this by saying, these are all of the documents. I want to look at invoices. These are all of the forms that are under the customer center in essence. I'm tracking and filtering by invoices, in other words. And then I can look at the status for open because this one is open. And then now we have the open ones. There's our customer. But more likely, if I'm in the invoices, I have a whole nother tab over here for invoices. I can go into it and look at the overdue ones, but mine isn't yet overdue, not yet due, and then we can sort it this way. There it is. Or we can go into our customers, sorting not the forms of the invoices, but by customer, and once again, look for the open invoices. So now I can see all the customers that have open invoices. And this is useful because I might want to periodically, most likely I would want to periodically, send out statements to all of the people that have at least overdue invoices saying, hey, could you pay us on the invoices? Or just as a friendly reminder that, we did some work for you and like you haven't paid us. And, I just thought we would follow up on that and so on. All right. So now also note that the product that we set up is over here. So here's the product that we set up, and once again, I would want to change the product that we set up so that it's not subject to see how it's subject to the taxes? I want to uncheck that so that it's not subject to the tax. So I go into sales tax and say it's non-taxable. So that means when I populate it, I won't have to uncheck the tax button.